On the day of the RBI policy, very important to understand the setup, which remains pretty much the same. But let's just look at what are the most important points of the market. The first one is the lowest point. The second one is the low we made right after the war. And the third one is the low that we are making right now. These are the important lows, and the important highs are wherever the market stopped moving up, the highest point where we reached, and those are the high points. So these are the points that are going to allow us to draw the key trend lines that we use for our support and resistance. So as we have been doing in practice, we will connect the most recent two lows, and that sort of gives us the trajectory that we are trying to follow for the last couple of days, starting with this shelf support down here at 24,462, where we've tried to hold, almost 3 times now. And the attempt that we are making, yesterday we tried to go past this first initial resistance near 24,670. And once we get past that, then we have to attempt the high, which is near 25,080. Now, once we are done with all that, then it's to the top end of this channel, which is slightly rising above 25,700. So 25,725 is the number that I see up there. And that is what we are going to try and do as long as we hold the support zone. Now, below the support zone, if at all there's a dip, 24,300 remains the worst case scenario support at the lower end. But we have started to see this uptick and should watch whether it continues with the news today. The next thing we will do as the trend starts to advance is consider alternate trend lines for the entire structure, something like this. But we will get to that once we start seeing a stronger upward trend.